Okay, our next talk will be about how
Thank you.
professional traders keep a record of their trading stats, including their hit ratio, profitability per setup, the risk reward, and so much more. Here we find out how and why effectively tracking your progress is key to more consistent performance. Our next speaker is the head of global equity trading at Citiesecurities, joining the team in 2008 after graduating from Ateneo de Manila University in 2008 with a bachelor's degree in management engineering. He currently serves as one of the senior coaches at Calum Trading Institute and helms the module on various market timing systems. Ladies and gentlemen, let's give a warm welcome to Mr. Richard Pacheco.
Good afternoon, everyone. Before anything, I'd like to share a conversation I had with my wife several weeks back. So I was just enjoying my meal in the dining area. I was having a double cheeseburger, a large fries, and an apple pie, right? So she suddenly came up to me and told me, Chad, you're gaining weight. Ang taba mo na. It's like, baka naman unhealthy ka na, di ba? And like, I told her, I was defensive, of course. I was like, no, I'm good. I'm happy. Kalahati lang naman ng closet ko yung di ko asya na sa akin. Hindi pa naman sumasabog yung botones sa tiyan ko, di ba? So, sabi ko, mahal mo naman ako di ba? Tama na. Right? But she didn't stop there. She kept pushing me. She kept telling me that I should check my weight, check my vitals, go get a blood work. And eventually, I capitulated. So I went to my weighing scale, which measured my weight and my fat percentage. And OMG, I've gained 20 pounds and 5% fat since my wedding, which was just last year. And that prompted me to eventually go to the clinic and had my blood work done. And my cholesterol levels were off the charts. Okay, so that was the reality check for me. Right? So the moral of the lesson there is you may get away with not listening to your wife, but when you see the numbers right in front of you telling you the truth, you have no choice but to take action. And I might have taken some action already, but I don't know. Let's see. Okay. So, in anything in life, and in my case, I need to come up with a goal. Right? If I want to lose weight, I need to put that in paper. I need to come up with a goal. Let's say I want to lose weight. I want to lose this amount, right? I want a body like Thor. If you've watched the Avengers recently, you may actually believe that I'm actually near that body right now, okay? Or I just want to be plain healthy. I just want to be healthy, right? However, I need the means to get there. I need to go to the gym. I need to find a nutritionist. I need to watch what I'm eating, right? And I can't just do whatever I want in order to lose weight. I can't compromise my health. I need a guide to do that. I need something to tell me whether I'm on the right track. I'm on the right path to losing weight at the right pace. Right? I can't just do lipo or something like that. It has to be sustainable. Okay? And it's exactly the same thing in trading. Right? Before anything, I need to have trading goals. I need to put down how much I want to make at the end of the year, at the end of each month. And I need the means to get there, which is knowledge. In Calum, it's the FTSR framework. So it's accumulated knowledge that you gain over time. So for today, what have you learned? You've learned reversals. You've learned from the 40 plus years of Boss Edward's journey. Right? You've learned about the types of games that you play in the market from Leonard and Charles. And these are the tidbits that you gain over time in order for you to get to your trading goals eventually. Okay? But there are no shortcuts. Right? You may get lucky, you may get a tip from someone from a Facebook group or whatever, and you gain 100% in a few days. But that's not a sustainable way of doing things. You have to do it you have to follow a process to it. And data analytics, reviewing your numbers, reviewing your data, right, that will help you determine whether what you're doing is sustainable or not, whether it's replicable or not. Okay. Now, why is data analytics or reviewing your data such a good thing or good practice to do? Okay. Number one, it creates uniformity for goal setting, benchmarking, and peer reviews. Right? It's an objective way of looking at things, of measuring yourself against benchmarks. Okay? And let's say you have a mentor. If you have a respected, a credible coach that you can go to, this is one way of that person to evaluate whether you're actually doing it correctly. Next, it indicates whether you're straying away from the process, if you're following your system or not. It also alerts you to make changes in your system. Okay? Whether reversals is the right type of system for you or not. And it heightens your self-awareness of your trading tendencies and bad habits. Okay? Boss Edward always tells us that he only needs to see how a trader trades or what the type of stocks a trader trades in order for him to understand or know that person. And that's the reality of it. Right? Your trading reflects your own personality. Okay, so let's just go through the process of how we can use data analytics, reviewing our data analytics in our trading systems. First and foremost, you should find the drivers of performance and craft a plan. So what is driving your numbers? Next, you execute, you review, you reflect. A part of this is putting your trades down in a journal, okay, which what we'll do later on. Okay? In this part, it's also a good way of finding your bearings and assess whether you're in the right direction, if you're in the right path in achieving your goals. And also an important part is getting feedback from your mentors, coaches, or peers. Again, find a credible one or credible group. You can't just go in Facebook, find a guru, and follow whatever that guru tells you. Okay? Find someone who's not really interested in giving you tips, but who genuinely cares about how you're doing, what you're doing, and gives you criticism, positive criticism. And then after that, you make the necessary adjustments, and you have to stick to it. You have to commit to the improvement of your processes. And you can't be in denial. Di ba nga sabi ni Edmond, being wrong is not a choice. Staying wrong is. Okay? And then the whole process starts again. Okay. For today, we'll only be looking at a few ratios, a few metrics for basic analytics. Okay? But I guarantee to you that even these three metrics will greatly help your trading. Okay? It's the first step towards your trading goals. All right. First one is the edge ratio. The edge ratio measures the trader's execution efficiency. Okay, how much you make for each peso that you lose. How do you compute for it? It's simple math. Okay, madali lang siya. You divide your average win with your average loss. Okay? So obviously, the higher the ratio, the better. Okay? Now, how do you rationalize the math? You find the drivers for increasing your average win. You think of ways to doing that. Okay? And then for your average loss, you want to control it. So you were able to get a bird's eye view of how to use the VAR system and how you can integrate it in your trading. So that's one way of doing it. Let's look at a few examples. Okay. First one, improve expectation setting through fundamental and technical analysis. Okay, so this is similar to what Leonard and Charles discussed earlier today. The 45, 60, 90 degrees companies. Do you still remember that? Okay, so just basic knowledge of those three types of stocks could greatly help you put expectations in your plans. So if it's a 45-degree company, you don't really expect it to go up in a very explosive way. If it's a 90-degree company, then you know that there could be more upside. Okay? Then you can also use a trend following system to maximize certain moves. Okay? Because there is less supply, mas malaki yung potential na iakyat ng stock. Okay? You can also use valuation to your advantage. And one way of doing that is closely follow the calling the shots. Okay? Next, think of ways to control your losses, your average loss. So, what Lawrence discussed earlier today, set your bar or your value at risk before entering a trade and follow it with utmost discipline. Huwag na kayong umasa, huwag na kayong mag-long term. Trader naman tayo, wala naman tayo sa Investor Summit, so just follow it when it hits your stop. Okay? Do not chase prices beyond your plan. Diba? Tawag dito, FOMO, fear of missing out. We can't just let our emotions take over. Okay? Pag wala sa plano, huwag mo na habulin. Okay. Another concept is implement a time stop mechanism or selling when a position is taking too long to move. Okay? So, kunyari, for example, you're in MPI, right? Fresh na fresh, in-explain ni Edmond kanina. If it's taking too long, there could be something wrong about the company already. Okay? So, when it's taking too long, you have to research, you have to check, do your due diligence, and check if there is really something wrong with it. Kung meron, cut na. Okay? Next, hit ratio. Now, this metric measures the trader's stock picking efficiency. How well you do stock picking. Again, simple math. You don't really need an Excel sheet to do it. Right? It's the number of profitable trades divided by the number of total trades. Again, you think of ways. Again, the higher the ratio, the better it is. Right? Think of ways to increase your profitable trades. And then for the total number of trades, align it with the market sentiment. I will discuss this a bit more later on. Okay. How do you increase your profitable trades? So just some examples. First one, improve mental preparation by following an effective daily routine. Whether it's reading the newspaper every morning to get ideas, fresh ideas, or talking to your peers, not following gurus, but talking to your peers, whether it's watching the Bloomberg or CNBC every day, and then reviewing your trades at the end of the day. Okay? Another way is to track sector rotation and market cycles. Focus on those in-play stocks with strong volume. So Juanes earlier today mentioned that the property sector is the hottest sector right now. Right? So one way of improving the number of profitable trades that you will make is to focus on the companies that's in that sector. Okay? Next, you can also lay down rules for stock picking. Okay, may rules, hindi yung random lang na lumabas sa ticker, titirahin nyo, o all-in nyo pa, yun yung worst, di ba? Just you can lay down, ano ba yung metrics, ano ba yung gusto ko sa isang stock that I will filter down, I will limit it to those stocks. Okay. Now, how do you align yourself with market sentiment? Avoid overtrading. Limit the trades that are not part of your system. Okay. So again, if it's just a random pick, a random tip from someone, you should still evaluate and take everything with a grain of salt. If it doesn't fit whatever you're doing, whatever system you're using, then don't trade it at all. Okay? But there's also a thing called undertrading. Undertrading is also bad, okay? Especially if the market is bullish. If it's a bullish market environment, you should be seizing the opportunity. Right? You have to keep executing, especially no. If there is a setup, you can't second guess yourself. Okay? Seek to understand market sentiment and its effect on stocks. So if everything is aligned, if the macroeconomic backdrop is good, if the big picture technicals is good, you see the index rising to 8,400, everything is bullish, then you should be aggressive as well. In this type of environment, it's okay to see your total trades to increase. Next, the churn rate. The churn rate, it's the total value traded in your portfolio divided by your account equity. So what does it measure? It measures your portfolio turnover or utilization rate, the number of times your whole account is utilized given a period of time. It's a good indicator of overtrading and undertrading, but you have to take it in the context of market sentiment again, as what I've said in my previous point. It's also practical to monitor because of commission costs. Okay? If you are overtrading, if your churn rate is high, right, you'll have more commission costs. And that could eat up into your equity. Okay? Kala mo, kumikita ka na, pero dahil trade ka ng trade, ang taas ng churn rate mo, at the end of the day, talo ka pa rin. Okay? Alright. Now, this chart or this image shows the relationship between the hit and edge ratios. Okay? It finds that the break-even point. So at 30% hit ratio, this means that your edge ratio must be 2.33. Okay? And what it says basically is the lower, if your stock picking efficiency is low, you need to compensate with your execution. Dapat magaling ka mag-execute. You should make more for every peso that you lose. If your execution efficiency is low, dapat magaling ka mag-stock pick. Okay? Alright. Now let's look at trader type benchmark. So, again, let me reiterate yung paggamit ng nila Leonard ng games. People play different games in the stock market, right? But you have to find the best gamers in the stock market and try to benchmark your numbers to their numbers. Okay? This is a way of goal setting as well. Right? It's important to utilize benchmarks in setting goals. In Citiesecurities, we have basically three types of gamers, three types of traders. First one is the position trader, second one is the swing trader, and the last one is the day trader. Okay? Ang position trader utilizes duration patterns, holds a bit more longer than the usual trader, and utilizes fundamental analysis more than anything else. Okay? Their hit ratios is 45 to 50%. Their edge is also quite high, and the churn rate is low. Okay? Swing traders, yung topic sa kabila, more on pullbacks and ranges. And the hit ratio is quite low at 35 to 45%. Their edge is also a bit lower than position trading at 2 to 5, but they churn more. Mas marami silang trades. Right? And it also makes sense that their hit ratio is quite low because they trade more than the position trader. The day trader, on the other hand, utilizes intraday techniques, momentum, hype, right? And their hit ratio is lower than the rest at 30 to 35%. Edge ratio is at 1.8 to 2.5, but the churn rate is greater than 10. So, and an analogy for this type of trader is how the traditional Chinese do business. Low margin, high turnover. But first, you have to make sure that your system or your setup is actually making money for you. If you're not making money in that type of system, in that type of setup, then there's no point in increasing your churn rate. Okay? Let's use a hypothetical example. So this person, probably named Jeremy, fresh off watching Avengers Endgame, uses this handle, okay, Hawk Eye. Now, looking at his metrics and his benchmark in using Citiesecurities numbers, his edge ratio should be 2.5 and above, hit ratio 45 to 50%, churn rate at 2 to 5 times, and total return about 20%. Okay. His actual numbers in 2018, this is monthly figures, edge ratio 2.64, hit ratio at 46%, and churn rate at 3 times. Total return at 22%. So very good numbers. However, in 2019, ito yung nangyari. January was pretty good. His edge was 2.7, hit ratio at 48%, and churn at 3 times. Return niya, decent at 2%. But come Feb and March, suddenly his numbers deteriorated. His edge ratio in Feb, 1.7, hit ratio niya was still good at 55%. Churn niya, 4.5 times. But at the end, his return was just flat. His worst month, March, edge ratio at 1.5, hit ratio at 28%, and churn is at 8 times. So nangyari, at the end of the month, talo siya 2.3%. Now, when you see these types of numbers in your own ledger, in your own reports, you should investigate why. Okay? So this is what Hawkeye did. Okay? So just a summary, based on his 2018 averages, benchmarks, and name, this guy is actually and clearly a position trader. In the first quarter of 2019, his ratios deteriorated below his averages, and this had an apparent effect on his bottom line, right? Obviously. Now, based on his own analysis and upon investigation, these are some of the factors that had affected his dip in performance. He cut late in FGen, he mismanaged his house position, and was not able to maximize the move, and his churn was more than usual in a weak, neglected market. Let me go through each one. Okay? So if you look at the chart, FGen. So ginawa niya, he bought on breakout, which was good, right? It's a correct entry point. But what happened was, he didn't follow his cut. In this type of system, you should be squaring or you should be selling your position at break-even point. But he didn't. So this was there. He cut too late. So this was his analysis. Got a little emotional, put in more size than usual, so I froze and cut below my stop loss. I lost more than my intended VAR at 2% and it affected my trading for the rest of the month. How many times have we experienced something like this? Diba? Kasi hindi natin alam, papasok tayo sa trade, hindi natin alam magkano tatalo natin. Ang laki na pala ng allocation na pinasok natin. And in these types of situations, the tendency is to get emotional. And yun nga yung nangyari sa kanya. Okay? Next, mismanaged trade in-house. So in-house, he was able to buy, again, the breakout at that point, which was good. He made money, right? But he sold randomly, and it wasn't part of his plan. Okay. What was his analysis? I got a little jittery. I did not seek to understand the fundamental reason behind the strong move. If I had, I would have placed higher expectation on the stock. Maybe if he did a little due diligence on house and looked at the market environment as a whole. Okay? The rates are going down. There's rotation in the property sector, and there's even buybacks at this price level, right? So if only he did a little bit more work than he did, then he could have held a little bit more and increased his average gain. Okay. Now looking at the broad market, PSEI, this was his analysis. Market had already broken down, but I still executed too many trades at 8 times. I need to step back a bit when there's a significant trend line break. Okay, so that's the trend line break. So if you attend Sir Juanes' seminars, at this point, you should be already lightening your positions. But he didn't. What happened was, he actually traded more and more in order to probably make up and recoup his losses, which was counterproductive in the end. Okay. Now, after that, after looking at his ledgers, his reviews, the next step is to make action plans. And these are his. Okay? So based on his data analytics, he had below average edge ratio. Now, his review and analysis was he had an oversized position in FGen, which caused his average loss to increase. Again, you want to control your average loss. And then there's a lack of mental preparation in-house, which lowered his average gain. Okay. What are his action plans? First, find an accountability partner to watch over my risk levels. So this is like a guardian angel, accountability partner, someone who will look over your own trades, your own plans, and tell you, throw water in your face and tell you, Chad, may mali ka ng ginagawa, you should do something about it. Right? Or you're not following your plan. Cut immediately. Parang ganon. Okay? Next, create a template to use when researching stocks. So this was because of that lack of mental preparation in-house. Next, based on his data analytics, his ratio was also below average. Now, based on his review, he was out of sync with the market environment. So what's his action plan? List down significant weekly top gainers to monitor and track sectoral moves. Focus capital on the hot sectors. Next. Above average churn ratio. The main reason was, according to him, he overtraded in a weak market environment. What's his action plan? When there's a significant trend line break, immediately lower position sizing. Okay? Okay. Just a recap of what this our hypothetical person, how I went through. First and foremost, he found the drivers of performance and crafted a plan. What were the drivers of his edge ratio, his hit ratio, and his churn rate? He looked at benchmarks, based it on Citiesecurities averages, and aligned it with his. Next, he executed. He looked at his ledgers. He found that he cut late in FGen. He mismanaged his house position, and he overtraded in a weak market environment. So that alone indicated that there was something wrong with what he was doing, right? So something had to point him towards the right direction. Next is, along the way, he probably got feedback from his mentors, coaches, or his peers. And then he made the necessary action plans in order to improve his system and his performance eventually. Okay? Now, what we've discussed today, it's really just the tip of the iceberg. Edge hit and churn ratios are just basic data analytics, right? But again, like I mentioned earlier, if you commit to it, if you at the end of the day, later when you get home, you try to put in your trades in the ledger, and you become more aware with your trading tendencies, with your bad habits, that will point you toward the right direction. There are more to it. there's more to it. Okay? So in Citiesecurities, we look at first setup efficiency. So if you look at ranges, if you look at pullbacks, reversals, right, momentum, and then we look at how efficient we are per type of setup. You can also do this on your own based on what you've learned today. So if you've identified certain setups, or like for example, you buy M-Wide or Cebu Pacific, and what's the other one? Edmond said, Mrs. G, correct? Okay, so you apply that, and then you look at the results. You clump it under reversals, and look at your numbers after a few months. Okay. Also, in our company, we also look at market cap, price levels, and other data points. We integrate it in our analytics as well. Further down the road, other applications in data analytics, big data, machine learning, and AI, those are strategies, or those are concepts that we will need to further explore. Okay? Because the reality is that's the direction of the industry. Right? Okay, so next is I'm going to walk you through how to use the COL Trading Performance Analyzer. Okay. Have you downloaded the spreadsheets? Downloaded na ba? If not, you can do it at your home. It's fine. It's free. It's a gift from COL. Okay. So this is how it looks if you haven't seen it yet, if you haven't downloaded it yet. Okay? So we've talked about hit ratio. Again, that indicates your stock picking efficiency, right? And then their edge ratio, which then measures your execution efficiency. And then lastly, your churn rate. Okay? However, medyo kailangan ng konting sipag because you have to go through your ledgers in COL. It's available, and you have to input some data, okay, before you arrive at these numbers. Okay, isa-isayin natin. Ha? So you go to the homepage of COL, you go to trade, you go to portfolio, and then you view your monthly account ledger. That will show, for example, this one. That will show your trades for each month. Okay? Sino na gumagamit nito? Does anyone use only a few hands? Okay, so there's a wealth of data in your COL accounts and you're not even aware of it. Okay? So, pag uwi nyo mamaya, subukan nyo na. Again, this will help you go towards the right direction. Okay? Okay. Number 2, you look at your you input your beginning balance. And how will you do that? You look at your December 2018 ledger and look at your total account equity at the end of the month. So, and then you put it in your beginning balance. Okay, so look at the total account equity, you put it there. Next, input your carryover positions or your positions at the end of December. Okay? However, you have to put the letter C under the date. That will remove your commission costs. Nangyari kasi, nung December, binayaran nyo na yan. Ngayong January, you don't need to plug the commission costs. Automatic na yan. Okay? In that area. You put C. Then you put AGI, or if you want the whole name, it's really up to you. You just have to be consistent, okay, with how you input the company names. You can put in the ticker, you can put in the name, it's really up to you. You put in the quantity, the number of shares that you had bought, and then the price at the end of the month. Again, at the end of the month, current market price at the end of the month for December. Okay, next, for 2019, so you're starting fresh this year, you put in your buying orders. So for example, you have MEG. So you put each entry there and the corresponding prices. Same with MWC. Put in 3,200 shares total, and then you itemize it. Okay? Then it will automatically compute for your commission costs. Okay. Now for other transactions like deposits, withdrawals, margin interests, and dividends. Okay. So this is just an example. Put in your additional deposit, your withdrawal, and then your margin interest. Just make sure that everything is positive. You cannot input a negative value in this part. Okay? So all positive. Kahit na negative yung nakalagay dito, or even if you're withdrawing funds, put in a positive number, the absolute value. Okay? Next, dividends. Same thing. You input the stock, you input the amount. And then for mutual funds, this is quite confusing. That's why there's a sample sheet in the Excel file. So you put in the amount that you had subscribed to, and then you put in the number of shares that you had bought. So, there. Then it will automatically compute for your price. Now for selling, okay, so you put in your selling orders, put in the amount, again, then put in the quantity. Pag di nyo binenta lahat, put an O. That means it's an open position. Okay? And same with your stocks. Input selling orders and open positions, date should be O. Okay, so there won't be any fees. Okay? So for AGI, for MWC, di nyo pa nabenta, lagay nyo O. Then put in the numbers. Then you can input your review for each trade, then your analysis, okay, so that it will be easier later on. So, for example, this is AGI. I was patient with my move. It's my A trade. Leonard quickly mentioned this earlier that you should be good at one game and just really hone your skills until it becomes your number one option. So that's an A trade. So if it's reversals, you keep using reversals until you understand the little things, the nuances in that type of system until it becomes an A trade. Okay, for the next one, this is Mega World. Right? Sold too early, cheap pa pala. For MWC, breakdown, didn't cut, dasal na lang. Siguro hindi alam na nagkaroon ng water issue or they didn't follow his stops. There was a big breakdown in the chart. Okay, so that was his analysis. Okay, after that, review numbers and your ratios. Looking at the numbers, ang ganda naman eh. Ano problema? I was up 14,000 pesos or 4%. Pero ano ba? I was too focused on the results. Right? But looking at the internals, hit ratio was good, but the edge ratio was terrible. Okay? Hindi naman sustainable ang 75% hit ratio. Right? If you are trading, if you look at a position trader's benchmark that I presented earlier on, pag position trading, 45 to 50% lang eh. If you're swing trading, mas mababa pa. Paano pa pag day trading, 30 to 35%? And that's the average of professional traders. So that 75% is not sustainable. So you must, upon looking at your numbers, you should find a way to increase your edge ratio. Okay? Right. So some necessary adjustments. So this is what we've discussed earlier on. So for MWC, cut your losses when it breaks. Cut your losses when it breaks below identified support levels. For Mega World, I need more time to spend. I need more time to spend reading on the company. I didn't know that this was still under fair value at that time. So one thing I could do is to closely monitor the investment guide and COL, or calling the shots, and adjust accordingly. Okay? Now, one way of doing this is, benta ko na lang muna yung kalahati ng position ko. Tapos yung balance, hawakan ko na lang until either it hits fair value levels or it breaks significant support levels. Okay, for AGI, it was a great trade. I stayed patient with the move, and it was an A trade, a model for future trades. And this is something that I want to replicate. So again, your numbers will indicate those types of trades that you can use over and over again in the future. Okay? So just to end, we've discussed how to plan your trade using the FTSR framework earlier on today. Execution, how you trade your plan. Then the last one we've discussed is what you should do to review your numbers. Okay? So again, take advantage of the gift that we've given you, the COL Trading Performance Analyzer. This will really help you achieve your goals eventually. This is the right step towards the right direction. Okay? So just to, this last slide again, Calum is going to Singapore. If you have time or if you have friends who are in Singapore, please do alert them, tell them that these three will be there, will impart their knowledge, and it's a must go. Okay? Thank you so much.
All right. Round of applause to Mr. Richard Pacheco.